Well, first of all, if we're talking about, the NASDAQ, right, or even the S&P 500, there's no way to know. I mean, I can't tell whether this is the next bear market or a correction. But if it wasn't for the Fed, it would be a lot easier because the market would just collapse and it would be pretty obvious. In fact, if it wasn't for the Fed, it already would have happened. So the Fed is in there distorting the markets. And so the question is, will the Fed be able to prevent this correction from becoming a bear market? And will they be able to push the market back up to new highs? But that's all the market has going for it. There's no fundamentals. The companies are already way overvalued. It's just the monetary policy. But this monetary policy isn't costless to us. It's not like there's no negatives of diverting all these resources away from the real economy to prop up a bubble in the financial market. I mean, it's actually ironic because a lot of people look at Wall Street and they see, when the Dow was making new highs and NASDAQ was over 12,000, and somehow this is indicative that, hey, we're going to get this V-shaped recovery. The stock market is telling us that the economy is stronger than we think. It was actually the reverse. It was the weakness in the real economy that was propping up the stock market. What's bad for Main Street is what's good for Wall Street. What was driving the rally was the economy was so bad that it was causing the Fed to print even more money to offset it. And since the only really game that the Fed has is the wealth effect, the only place its monetary policy is effective is in inflating asset bubbles, not generating real economic growth. That's what it's concentrating on. So it's putting all of its firepower into maintaining the phony wealth of inflated asset prices, pretending that this policy is meant to stimulate the economy. But the only way they're trying to stimulate the economy is through this phony wealth effect. They hope that if people feel wealthier because their stock prices are higher, that they'll go out and borrow and spend more money. But of course, convincing people who are already over leveraged and broke to go deeper into debt to buy more stuff that they can't afford, that is not a recipe for economic success, right? It's a recipe for disaster. Well, obviously, Americans are the most exposed to the dollar bubble, not the stock market bubble, because not all Americans own stocks, but all Americans own dollars. I mean, some dollars. Yeah. And if they don't own them, they're getting paid dollars, in their job. So the dollar and the value, the purchasing power of the dollar is very important to all Americans. And of course, investors, right, they're looking at their stock portfolios and, hey, how many dollars is my portfolio worth, right? So everything is referenced back to the dollar. And if the dollar collapses in value, then what difference does it make, right? How many you have or how high your stock portfolio is, on your statement. If you can't buy very much with the dollars when you sell the stocks, or you try to take your dividends and go buy things. So that's a bigger concern. The bond market also is tied in with the dollar bubble. They're actually the same bubble because bonds are really just dollars. They're IOUs for dollars for future delivery. In the interim, you get an interest rate, so you get some more dollars while you're waiting for the bond to mature, and then you get your principal dollar payment back. So they're all tied up together. And of course, when the bond bubble pops, that also is going to impact more Americans than the stock market because of the impact it has on the debt markets. Because so many Americans are living on credit, whether it's a car loan, an auto loan, a student loan, credit card debt, mortgages, whatever they got. I mean, most Americans, need to borrow money to survive. That's how they're making ends meet. And so this is much bigger than the wealth effect from the stock market. But it's all going to take a toll on the economy as the air comes out of these bubbles. It's just that in order to keep the stock market bubble and the real estate bubble and the bond bubble propped up, the Fed sacrifices the dollar. So I think the dollar is going to be the first one to pop, and then the rest of them will come tumbling down, probably bonds even before stocks. But stocks could be going down, but I think bonds will pass stocks and go down more. I think your safe haven is going to be gold. Gold is the mirror image of the dollar, really. As the dollar goes down, the gold price will go up. So I think gold is also letting you know what's going on. Brett Johnson's theory is that before the dollar crashes, it's going to have a final rally, kind of like a drowning man coming up for air before he goes under for good. And is it possible that he's right? Yeah, I mean, anything's possible. I'm not going to say it's impossible he's right. But since we both agree that even if Brent Johnson is right and the dollar does have that rally, it's going to collapse. So it's still going to drown, even if it comes up for another breath. And so I don't want to bet on that rally. If we both agree in the final analysis the dollar is toast, then let's just invest for that outcome. Because that way it doesn't matter whether he's right or I'm right. Because we both agree where the dollar is going long run. We just disagree where it's going short run. Well, I don't care about the short run. I'm not, trading options. And I don't want to take the chance that the dollar doesn't rally. See, here's the problem for the guys that are following Brett Johnston. And there's other people like Harry Dent. I talked to him. He's like, oh, yeah, eventually the dollar's going to crash. But before it does, it's going to go way up. Okay, what if it doesn't? What if you don't get the big dollar rally? What if the big dollar rally already happened and you just didn't realize that was it? And then the dollar just crashes and you're still waiting for the rally. You're broke. You've lost everything. You're holding on to, confetti, right? But let's say those guys are right and you just follow my advice and you get out of the dollar now, right? And then the dollar rallies. Well, so what? Who cares? You've got gold, you've got foreign assets or whatever. The dollar goes up temporarily. Big deal. Then it crashes and you're fine because you don't have any dollars. So if you follow my advice and Brent Johnson is right, you're still okay. Would you be better off if you timed it perfectly and got this big dollar rally and then dunked dollars at the height? Yeah, maybe, sure, you can be better off. But what if that doesn't happen? See, if I'm right and Brent Johnson is wrong, you're broke. I don't like those odds, or I don't like those scenarios. Because if we're both right and you follow my advice, there's no way you go broke. But if I'm right, if we're both right on the long run, but Brett Johnson is right in the short run, you don't go broke. Right. But if you follow my advice, but if I'm right and you follow Brett Johnson's advice and I'm right, then you do go broke. Just position yourself for the end game. Yeah. We just disagree on how we're going to get to the end, but we all agree where we're going. So if we know where we're going to be, if our portfolio is positioned to win in the end, then we're going to win. If you're trying to finesse this and trying to bet that you know exactly how the journey is going to play out, and then you bet wrong, you're going to lose. Yeah. Even though you know what the end game is, you're going to be just as broke as the people who don't. But meanwhile, I think what we're about to see, and I know Brett Johnson too, he still thinks that that gold is going to go up in terms of other currencies, even if it goes down in terms of the dollar. Right. And he thinks gold might even go up in dollars, even as the dollar, loses less value than the euro and the yen. So I think that one way to follow both of our advice is just to buy gold, because we pretty much both agree on gold. Mm-hmm. We just disagree on the relative values of the various fiat currencies. But I think that we're about to see the most spectacular gold rally that we've had since the 1970s. Right? And I think the profits that people will make who are invested in gold stocks now will be the type of profits that were made in the 1970s. Right? What happened from 2001 to 2011? Those were good years. People made 10 times their money. But I think they're going to make much more this time, because that rally was simply the end of the bear market, right? We had a big bear market in gold that went from 1980 to 2000, right? That from the peak of the big bull market in the 70s, we had a 20-year bear market. And then we kind of came roaring back out of that bear market. Gold went from under 300 to 1,000, pulled back, then went up to 1,900, right? Then we pulled back almost 1,000. We went through this 10-year, bottom base building. But now we're ready for the type of bull market that we got in the 70s.